Hello, in this video we'll be looking at tax planning before year end. We've just got under a month to go before the new tax year begins, which means under a month until we need to be making sure that we've used up allowances, looked at our tax return and seen how we can do some planning and ensure that we're maximizing our tax efficiency. From speaking to many of you on the tax return side of things, we're often looking at a tax return after the tax year has actually ended, which means there's not much we can really do retrospectively to help reduce that tax bill. But that's where the bit of tax planning in March is going to be super important, and you can do this all on tax. So let's show you exactly how that works. Starting off just on my taxed account, and if I click on personal taxes and then I click on start questionnaire, you will all see 25-26 over here as well. Let's click start questionnaire and then let's jump into the main taxed filing. You'll always start off by seeing this option here to pull data from other sources. I would recommend using the previous tax submission, and then you will be able to pull data from your last tax return. Let's choose 24-25 for example. And then you can see the details that we want to pull from last year. In this case, I've got a nice simple employment case. So just employment details here and some capital gains. Let's say that I no longer had any capital gains. I don't need to tick that. So I don't need to pull that forward from the last tax return. Now this is going to help to save me time. I don't need to go back and actually redo the questionnaire from scratch. I just can pull data across and update some of the numbers instead. So I'll hit continue. And we can see that there is a tax fee, which won't be applicable to me because I just have employment income. But if you are self-employed or have rental income, we will ensure that we allocate that tax fee there. And then let's hit import. And then you can see here, we've got all the categories now complete, only the general section to also review. But let's jump into employment. Now this is where you may have already got your you may have already got your last payslip from your employer. If not, you should be receiving that over the next couple of months. With that last payslip or with your Feb payslip, you will be able to review your overall salary and tax paid. In this example here, I'm using a salary of 105,000 and tax paid of 33k, which is resulting in around a tax bill of 1.1k. So use your latest information that you have, either pay slips or use an estimate of what you think it will be in the next couple of weeks. Now this will then allow you to proceed onto the credits and deductions tab. So once you've completed the employment section, you'll see credits and deductions. Now this is where you can start to analyze what else you could be doing from a tax perspective. Now, whether you're self-employed, a landlord or employed, it's all going to be very similar. Obviously, if you're self-employed or landlord, there's potentially more that you can do in terms of expenses, looking at what you may want to invest in the next month before tax year ends. But if you are outside of the business, outside of self-employment and rental income, we can look at these credits and deductions. Now, the two things that we're talking about today will be the SIP, the private pension, and venture capital schemes. Now, when it comes to using a SIP, it is essentially similar to many of you that may have an employer scheme. A SIP is essentially one that you might hold on a private basis, and you would be, when you make a contribution, you're making a contribution net. So it's not coming through salary sacrifice. You're basically doing this yourself. You can also contribute extra into your employer scheme if that's preferred. But in this example, I'll just use SIP and venture capital schemes. So if we look at the SIP example here, and we've got some videos that go into a bit more detail of exactly how the private pension contributions work. But let's make an example contribution here. Test tax year contributions. Let's say that we've made £5,000 of contributions, and how many of those were one-off. So let's just say this was all just a one-off payment that we plan to make in the next couple of weeks. If we hit yes to this, we hit next, you can see what's happened here is we've actually now reduced our tax bill by 3k. So the tax bill was around 1.5. It's now reduced to a 1.5k refund. So 5k, which we put into our pension, actually means that we've got the 5k in the pension plus a bit of a tax gross up as well. And then we also get to get a refund of 1.5k. So reducing that tax bill by around 3k. So that's going to be a big impact, especially for those of you who are in that 100 to 125k range, because you're in that 60% tax trap. Another great example to show you are venture capital schemes. So this could be investing into an SEIS venture capital fund. Now, some of these may have minimum investment amounts, some of them do not. You can invest through crowdfunding as well, or if you're going straight to a fund, let's say that we plan to go straight to an SEIS fund in the next couple of weeks. I'll just use an example. So let's say that I'm investing in startup, and then I'm going to add a minimum and add an amount of £15,000. Let's say that's the minimum ticket that I can invest. And I click add item. Now, you may look to make this investment in the next few weeks. And even if you make that investment in the next tax year, it's absolutely fine that you can still use it against this tax return. Venture capital schemes, SEIS, one of the things that you can use retrospectively. So if I hit next on this, we can see that we've now upped our refund by 7.5k. So £15,000 into SEIS means I'll get 7.5k refund from HMRC, but I've now got £15,000 worth of shares in SEIS qualifying companies too. So that is just a super quick way that you can use tax to model your tax return. Have a look and review your current position and see what else you can be doing. If you would like some one-on-one support as well, we're here to help. We're also going to be hosting a webinar looking at some of these tax planning tips. So feel free to reach out, and we're here to support and ensure that you are operating as tax efficiently as possible. Thank you.